In the early 2000s, one of the world's largest banks stood at the center of a quiet storm. HSBC, a financial giant with offices in more than 80 countries, was trusted by millions. Its logo symbolized global stability, security, integrity. But behind the polished boardrooms and towering skyscrapers, billions of dollars in drug cartel money were slipping through the cracks. Between 2006 and 2010, Mexican drug cartels were flooding the United States with narcotics and drowning in cash. Mountains of it. So much money that traffickers struggled to move it without raising suspicion. That's where the banking system came in. Investigators later revealed that HSBC's Mexican division had weak anti-money laundering controls. Enormous cash deposits, sometimes in specially designed boxes built to fit teller windows, were accepted with minimal scrutiny. Billions of dollars moved from Mexico into U.S. accounts. Internal warnings were raised. Compliance officers flagged suspicious activity. But the money kept flowing. By 2012, U.S. authorities uncovered the scale of what had happened. At least $881 million in drug trafficking proceeds had been laundered through HSBC. The bank had also processed transactions linked to sanctioned countries. It wasn't a rogue employee. It wasn't a single oversight. It was systemic failure. A U.S. Senate investigation described a culture of poor oversight and ignored red flags. Emails and internal reports showed executives were aware of serious compliance gaps. The result? In December 2012, HSBC agreed to a staggering $1.9 billion fine, one of the largest penalties ever imposed on a bank at that time. But here's what shocked the public. No top executives went to prison. The bank entered into a deferred prosecution agreement, promising reforms and tighter controls. Critics argued the penalty, though massive, was small compared to HSBC's global profits. The scandal ignited a global debate. Were major banks too big to jail? Could financial institutions facilitate criminal enterprises and simply pay a fine? The HSBC case became a symbol of how modern money laundering works. Not in dark alleyways, but in bright corporate offices. Not with suitcases, but with wire transfers and compliance failures. It was a reminder that in the world of global finance, the most dangerous transactions don't always look suspicious. Sometimes they look perfectly legitimate.